Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I want to talk about what's going on right now in interest rates for mortgages, especially as it deals with you investors. We have the Fed meeting, when I'm doing this video anyway, the Fed is meeting next week, and it's anticipated that they're still going to do a 25 basis point increase. Now, previously in the last few weeks, the Fed is basically saying that they need to get even more aggressive, and so 25 in March, 25 in April, more coming. And so rates flanged up in the last couple of weeks. So, for an investor paying maximum points, we were looking at 6.375% with 25% down for a 30-year fixed mortgage. And, that kind of made a little bit of a pause in the marketplace, but something has happened to change all of that. Primarily Silicon Valley Bank going down. Now, we haven't had a bank failure like this in a long, long time. In fact, it's the second largest in history in terms of a bank failure. And, I'm not going to get into the politics of it or the whys. There's some really good articles out there about it. But what essentially happened is that went down. Then a bank that also dealt with a lot of crypto players went down. And then Credit Suisse started having problems, and they're basically being bought out now by UBS. So the banking industry right now kind of looked a little bit uneasy, and especially because of the rates going up so very fast. The one thing that they had done at SVB is put a lot of money into 3-year Treasuries. And what happens when things are being, where the rates are changed, all of a sudden they were valuing these at a later date, at a maturity date, and they had to sell them because they were having a cash call from people that had their money there, and there's some big money there, like $500 million in the case of one company, and even more. And so then there was a run on the bank. So now about 76% of Fed followers, economists, all sorts of folks are saying, okay, this is changing everything. Now, the Fed is going to probably still do the 25 basis point increase, but they're going to take a pause, all right, to make sure that, the market, doesn't go into some kind of a recession. So now what's happened as of Friday, a few days ago, that 6.375 rate went down to 5.875. And potentially, depending on what the Fed says, and a lot of times what they say really affects things, it could go even lower. It could go to 6.75 or 5.75 or 5.625, which is what we're hoping for. Now, we think this is somewhat temporary, but basically what it means is if you're an investor looking to buy right now, two things I'm going to tell you is rates go up faster than they go down. And this is a unique situation that's causing the Fed to kind of pause on their rate increases. And so, if you're ready, I want you to be able to take advantage of that. The other thing is being in March, we're heading into the strongest rental season of the year. In other words, when we get into April, May, June, to the middle of July, for instance, it's a hot market. We get a maximum figure. We also get the lowest amount of vacancy. Last year, about this time of the year, vacancy was running about 8 to 15 days. We don't know if it's going to be that way again, but this is when people are looking at school systems and things. So the rates are down. We think you should take advantage of it now. If you're interested, please get a hold of us. We've got a lot of inventory right now that can close in the next 60 days.